This is Eric Muathe with Muathe.com for September 9th, 2008, about 2 minutes after the market opened. Yesterday we were up a huge chunk after the Fannie Mae Freddie Mac government bailout plan came out. And so right now we are called around 5 points, 6 points or so. I don't know how this market is going to trade, but my feeling is that if we trend lower today, we might see a 1% plus drop in the Dow. It's going to be a big down day if the market cannot follow through today, and I'll explain that in my video why I see that happening. Now let's go back, and the charts I'm going to use are from yesterday after the close, so they're not going to be reflecting this morning's price action. Luckily, over the last couple of 2 weeks or so, we had gone short Fannie Mae just around somewhere around here, around the $5 area, somewhere around there. And yesterday, as you all know, the stock was down almost 90%. So some of the options that we were playing were up 200-400%. That was a big percentage gain, for those who were short Fannie Mae yesterday, and we were lucky that we were on the right side of that trade. And so as long as we keep chipping away on such gains, or putting ourselves in positions where we can take advantage of market opportunities, it should call for a good close to the year. So let's go back now. Let's go and look at some of the indices. Yesterday, before market close, I'd mentioned that I'd noticed that the UNG, which follows crude oil and natural gas, was hitting this resistance on the price channel, and I made a note on my blog that more than likely we would be seeing fresh lows. And today we are down on crude oil to new multi-month lows, and so is the natural gas. So that was a right call, and I cautioned you guys not to go along the oil and gas energy complex. So I say we still avoid that sector for now until we get a rebound signal. This is a XLF, tracks the financial market. You can see yesterday after the gap up, we hit the price channel resistance top lines. So this resistance again has held for more than a year. And yesterday we broke above that at the open, but just closed exactly on the resistance level. What this tells us is if we don't get a follow through in the market today, more than likely the bulls are going to start giving up, and we're going to see prices move lower. And we are going to start threatening these lows that were made on mid-July. So more than likely, I see that there's pressure or intention for this ETF to start trending lower. So ultimately, you want to stay short the financials if you agree with that analysis. The other thing is we came and retested this RSI top lines on the daily, and you see yesterday we closed exactly on resistance. So that tells me there's probably weakness if we don't get a follow through in the financials today. S&P 500, you can see what happened is last week we broke below this channel here. In the last 2 days, with the Friday and Monday move, we came back and we back tested that break. If we don't get a follow through today, again, I suspect that we are going to be seeing another move lower to retest mid-July lows right there and potentially even break them. So I would urge you not to be very bullish at this particular time. All right, let's go look at the Dow. Now, the reason why I think the Dow might be down triple digits today is because we close, the RSI closed at 50.8. Every time we move above or below the 50 level area on any time frame on the RSI, you get big moves. That's why yesterday we had a big move as the Dow moved back above 50 on the RSI. Today we go below that. That calls for a big down day also. Now you see we've been trending with this price channel resistance on the Dow, that yesterday the tops, the highs of the day hit that resistance. If we cannot follow through again, we cannot follow through and break that channel top lines, then we are going to bounce off that and we're going to be trending to new lows again. You look at the S&P retail index, great moves out of a channel here, great moves out of a channel here on the weekly, great moves out of the channel here on the weekly again. But wait a minute, if you take a look at the daily, you see resistance on these top lines here shown by the yellow shaded area, and we hit that price level yesterday. I don't know if that's gonna hold, and you see we are finding RSI resistance, multiple resistance on the S&P 500 retail index, which tells me that this is also finding resistance, and that means more than likely we're going to be trending lower after that. Let's look at the URE ETF, tracks real estate ultra, and you see we are trying to, yesterday we tried to move out of those channel weekly channel highs. I don't know if that's going to hold for the week, but if you look at the RSI, we are hitting resistance level. Let's see where that can hold or not. And now let's go look at the URE daily, and you see we hit resistance on the 50-day, on the 200-day yesterday. Might not be able to move above that. And if you look at the RSI, we are hitting this double resistance on the RSI. More than likely the next move is lower. So I still urge you to stay short this market. That's my thesis for now, and until I see something else, then that's gonna remain the strategy. Right now, what I would urge you to do and how we can take advantage of this market condition right now is to go short two stocks, and they are, the first one is Lehman Brothers. Now, sometimes the best trades in the market are the most obvious, and this stock seems to be in trouble. So I say, like Fannie Mae, we go for the, we go for the kill. Just go for the, worst stock out there. And Lehman Brothers has been kind of trying to break these lows it made in mid-July, has held with this bounce here, and I think it's already trading lower today. But what's interesting is we still have time to short the stock because we have yet to break this RSI lows. If we break that today, then that's a perfect entry point to go short Lehman Brothers.